Good evening, good afternoon, bonsoir, buenas noches, buenas noches to investors in North and South America. 我係 York EDT investor， I'm York EDT， สวัสดีเช้า各位早晨 Good morning to investors in Asia. Buenas noches, buenas noches, good night, China. Good night to investors in Europe and Africa. I'm Danny Yu speaking from Hong Kong. It's 16th October here and 15th October in Wall Street. This week, I have three main points to talk about. Number one, changing of market sentiment. Number two, interest rate outlook. Number three, Hamas and Israel. For stock recommendations will be a review of the Magnificent Seven. Subscribe, like, and share. Remember to click the bell, please. Watch our playlist again so as to grasp the continuous trend of the market and refresh your mind. Market sentiment has changed in three aspects. The first is technically, people would not be afraid of head and shoulders again. As I have already said, even if penetration occurred, there would not be any avalanche. Secondly, the Fed official turned from hawkish to dovish and will not be afraid of rate hikes now. Thirdly, is the terror attack of Hamas in Israel even triggered a great war. Investors not so afraid, for they believe the military power of Israel will prevail. Inflation rate is lowered, but not yet reached the standard of 2%, a little far away. The latest CPI is at 3.7%, kept unchanged as last time in August. However, core CPI lowered from 4.3% to 4.1%. The difference is not so great. In September, three major indices were at the edge of head and shoulders and even broke the neckline. But I said investors should finish buying before October comes, for they are all false patterns and false penetration. The head and shoulders of Nasdaq is in a double top and right shoulder is in M shape, but jumped down to form a W shape at the neckline of a clenching downward head and shoulders. On false penetration, it broke up the W shape and started a new rising wave of above 5 average lines. So the sentiment is looking upward and seeing when the rising wave ends and not afraid of falling now. S&P is in an horizontal head and shoulders with an M shape jumping down to form a W shape after breaking through the neckline. Since this is a false penetration, so it at once formed a pullback and now going up to fill the jumping gap. It is also a false penetration. For DJIA, it is a clenching upward pattern, but also a lot of false pattern for too many supports after penetration and before reaching the minimum falling span. Now it is in a V-shaped rebound, also showing that it is a false pattern. Now investors know that all three head and shoulders in three major indices are false patterns, and they should aim at finding the end of rising wave and not the end of falling wave. Anyway, I've said numerous times that investors should finish buying before October comes, and have emphasized several times that should not do any short selling. How to tell a false pattern from a true pattern? Please refer to my electronic handouts and a series of 40 teaching videos with live examples and philosophical questions to think about as homework. Also read our daily report, which is the US Stock Express, for the latest comments. Any sponsor to our video, seminar, or daily report are welcome with appreciation. For interest rate outlook, since inflation is controlled, this rate hike cycle is expected to end soon. That is now very likely to be the highest point of rate hike. Even if not, there may be just one or more rate hike at most. After the rise of interest rate on July 27th, people were arguing how many rate hikes this year left. Some refer to the dot chart, which is twice, and some refer to the CME target rate, which is once. The latest speeches of officials of the Fed turned from hawkish to dovish. Basically, the interest rate is near the climax now. If there's a need for a rate hike, it will be once more only, and then will keep unchanged for a certain period of time. In mid-year or late 2024, interest rates will start to come down. That means they will keep watching the situation, but the focus of next year is on when the rate cut comes. So whether it will have any rate hike is not so important, for the rate cut cycle will start soon. As for the attack of Hamas in Israel, since its target was women, children, and the general public, but not military bases, so it's a terror attack and not conflict or war. The sudden attack is known as Pearl Harbor 2023, but the attack of Pearl Harbor aimed at warships, so it is a war, and now it's a terror attack. Israel organized a large-scale anti-terror war against Gaza Strip. However, Israel is a civilized Western country and must follow rules of war. That is, before the bombardment must notify citizens by message to leave the site first and cannot cut water, electricity supply, and maintain human necessities. Hamas had a lot of tunnels in Gaza and wished to use citizens as human shields. That is against the human rights of the United Nations. But if Israel attacks, human shields also will be blamed. So now they divided Gaza into north and south and drove all citizens to the south, and thus all left in the north are terrorists. After clearing them, they drove every citizen back to the north and frisked them to ensure no weapons, so those with weapons stay in the south are terrorists. This may take months to clear up and also need a large amount of tents and supplies to accommodate people moving from north to south. Surely will cause health and hygiene problems, supply of food and clear water. This is a hard job, and terrorists would disguise themselves inside the refugees. So it is a long-term fighting, but the response of the market is having confidence in Israel to take over this hard job. So what the future market will be? Let's take a look at the Chicago target rate. The chance of keeping interest rate unchanged on November 1st meeting at 525.550 is 92.3%, and on December 13th FOMC meeting, the chance of keeping interest rate unchanged is 68.5%. So when will rate cut comes? According to the CME, it should be on June 12th meeting, but the probability is just 38.0%, not firm enough. Anyway, the rate cut date will be in mid-2024, and the first half will be kept unchanged. So let's take a look at the Magnificent Seven. Just to repeat, these 7 stocks are not in pattern of head and shoulders. So in market forecast, besides viewing the 3 major indices, these 7 stocks should be viewed as 4th index. It consists of 50% of Nasdaq components and 25% of S&P components. Microsoft occupies 12.63% of the Nasdaq, and the falling trend has developed into a W-shaped pattern and is now developing horizontally, and is still above the year line of 250 SMA, which denotes still in bull market, and striving with golden crosses to be over all 5 average lines. Apple occupies 12.60% of Nasdaq. The downtrend is developing into a high-low leg W shape, but not yet fully formed. It has just fulfilled the jumping gap and is normally to have a pullback. And when finished running, will develop into a horizontal platform and is also trying to go up above all 5 major average lines. Google occupies 7.44% inside Nasdaq, but the trend is the strongest. It goes up platform by platform. It broke the recent high and retreated, but still above all 5 average lines. Amazon occupies 6.31%. Its pattern not so clear. It is still developing into a new pattern. The jumping gap not fully filled. It has no power to go upward at this stage. It only developed horizontally. Focus should be on the last W shape. For MEDA, it occupies 5.29%. The last wave since mid-September is the strongest. It formed a 3-leg platform, so if it drops down, may have the chance of forming a head and shoulders, but too early to say now. Among the Magnificent Seven, it is the only stock that near to head and shoulders, with double left shoulders but not yet formed. Anyway, it is still above all 5 major average lines, still in a very strong position. Meta occupies 3.68%. It's also a nice rising trend. Just broke recent high, even retreated still above all 5 major average lines. Mind that the recent low is in August, while for other stocks, the recent low were mainly in September or some even October. It shows it already has a long history of rising. Tesla occupies 3.38% and it is in a nice rising trend since January this year, but mind that there is a format of 3 background because Cathy Wood just showed Tesla. Business is still expanding but actually slowed down. For a lot of competition occur domestically and internationally, their market share is lesser and lesser. Even profit and production are still greater. But we have to put competitors into consideration. So Israel is going to start their land counter attack, and for the first week will be focus of the world. Importance will be over the Russian-Ukraine conflict. gold price and petroleum will go up, and we should keep an eye on related stocks also. Those again, subscribe, share, like, please. Sayonara, auf Wiedersehen, adieu, bye bye, see you next week.